are divided on how long the current market volatility is likely to continue. The Meteorological Agency says the rainy season has begun in Kyushu, Chugoku and Shikoku. There are also dark clouds casting a shadow on the Tokyo Stock Exchange. The Nikkei index ended the day at 14,142, a drop of 469 points from Friday's close. Following Thursday's plunge of over 1,100 points, it was the second largest fall this year. The drop on Thursday was the Nikkei's largest one-day drop in 13 years. Overseas hedge funds led the sell-offs as they tried to lock in some of the gains from recent weeks. Individual investors were caught up in the frenzy. The following day, Friday, Tokyo stock prices rose in the morning, but fell in the afternoon, before edging up slightly toward the close. Share prices fluctuated by over 1,000 points in the course of the day's trading. As the market opened for the week, shares were sold across the board due to investors' concern about the future. Not so long ago, the Nikkei index was close to 16,000. Now it's just to over 14,000. This investor says his stock holdings have suffered a significant loss over the past week, and he's worried losses may get bigger and bigger. Another investor says he's adopting a holding action in the hope that stock prices will rise again. The market volatility is also catching the attention of people who are not investing in the stocks. The person says the sudden fall in the stock market makes him wonder what's going on. This person says unless stock prices rise, Japan's economy will not be revitalized and money will not trickle down to the ordinary people. Another says the stock market may have just been caught up in the unrealistic expectations of Prime Minister Abe's economic policy. She says if Japan were having a real economic recovery, the stock market would keep rising without so much volatility. Stock prices are continuing to fluctuate. The big question is, when will they settle down and what will be the impact on the economy? We spoke with experts who are in charge of investment strategies at two brokerages. Hiromichi Tamura is the chief strategist of Nomura Securities. He says the ongoing instability on the stock market should ease off in a couple of weeks. Tamura says the government stands behind Prime Minister Shinzo Abe's economic policies, which are a major factor behind the recent increases in Japanese share prices. He says many hedge fund operators you talk to, so they want to buy Tokyo stocks if prices go down a bit. He says he has the impression that hedge fund executives see business opportunities in the current stock market in Japan. He says many market players have adopted a wait-and-see position for the moment, since the recent drop in share prices was much larger than expected. Matsui Securities senior market analyst Tomoichiro Kubota has a more cautious view on the market and thinks it will take at least a month to calm down. Kubota says investors are reluctant to take any action now as the price fluctuations have been so sharp. He says it will take some time for their concerns over another possible plunge to subside. He says quite a few individual investors are worried about a possible recurrence of this recent drop in which share prices fell 1,000 yen immediately after they were purchased. He says some investors were badly affected by that and will take some time for their wounds to heal. We also asked the analyst what the impact of the stock market fluctuation may be on the overall economy. Tamura says the economic progress targeted by the government is going well. He says it started from the depreciation of the yen, which helped improve Japanese corporate performance, and this went on to boost share prices and personal spending. He says he believes the turbulence in the stock market will ease off in 2 weeks. He says that if the market makes an upturn from that point, its impact will be positive for the economy, and that will further help the economic process to proceed smoothly. Kubota says the Abe administration is expected to soon start implementing the third pillar of its economic policy, deregulation and growth strategies. He says if the government sets forth monetary deregulation, that will help ensure all-out growth and investors will regain their confidence and start buying shares again. He says foreign investors are monitoring these moves closely and will also have an impact on the Japanese market. The market could become sluggish if the government fails to set forth any growth and deregulation measures that satisfy those investors.
The new week has seen more turbulence in the stock market. Chief Cabinet Secretary Suga said that because share prices had gone up by more than 1,000 yen in a week, the market is probably in an adjustment phase. The market is focused on what will come after the easy money policy, whether Abe's growth strategy is real.